Hi all and welcome to TCM Education. In this video we want to measure as accurately as possible the correlation between the gap up in a stock, the reason for that as much as we know it, the volume that the stock develops following the gap up or gap down, meaning important news, and the intraday trend, and how those three factors influence our ability to look at the chart and take a trade, hopefully a profitable trade. And also very important to observe these attributes very early, because if you observe a stock that's up 8% at 2 p.m., most likely the results, even if the trade is going to work, most likely the results are not going to be as great as if you observe the stock at 10:30 when it was up 5%, and you miss on that 3% move, and you're starting basically with a deficit or a profit deficit. It will be way clearer when we see some examples. Let's start with a trivial example. Yesterday it was June 17. We are off the earnings season. There was one stock that reported earnings, JBL. Now guess what? JBL is on our list. Let me point it out to you. Here it is. JBL closed the trading day up nearly 9%. The volume was more than 6 million. The intraday range was way above the threshold of 5%. It was 10%. Super important. It moved up nearly 9%. Volume was, I'm guessing, I don't see the numbers here, but we'll see in a minute, way above average. Let's see actually the daily chart, and we'll understand immediately what happened here. So you can see the daily chart. This is the volume versus the average. So a pickup of 200-300%. That's great. And then we had this trading range that started at 185, closed at 205, so nearly $18 or $19, so a clear gap up and go on the daily chart. That's basics for a trade as a day trader. So you have the knowledge, if you're watching NASDAQ earnings, that it's the only normal stock or stock that you ever traded in the past that reported earnings. All others have basically no market cap, no volume. So again, that's the benefit of finding one out of one, and it gaps up, and it is on your gainers losers list on one or on one of your list. Now if it's not on your list and you didn't follow up on JBL, let's face it, it's not a top tier stock. At best it's second, third or fourth tier stock, depends on what you're trading. Okay, so again, the only thing that should be pointing you to what JBL is only earnings, and it's the only stock. Like if there were 25 stocks reporting earnings, JBL is not going to stand out. But if it is one out of one, and it does gap up, okay, observe it. Now let's take a look at the intraday chart. Let's see what fits and what doesn't fit. Okay. Okay, so this is the price section. So what do we see here? First of all, at the open, a huge move in the first minutes up. Is this tradable? I would have to say no. I mean, unless you're focused 100% on this stock, and I don't know how many investors, traders, day traders, where we have so many, I mean, investors of JBL, that's trivial. But others, to follow JBL in the first minutes, take a trade, most likely it's very spready. I don't know because I wasn't even watching it, but it's clear that there was some pickup in volume. Let's ignore this move because it's pretty much coming out of knowledge of the stock and following it, and we are neither. Okay, well, none of us, no day traders are following JBL on a regular basis. There's no reason for that. There are way better trading opportunities elsewhere. So what happens here? So we have a clear gap up with huge volume. The stock moves up, pulls back, and then moves higher and reaches the highs of the day, which are, let's call it 204. Let's call this plateau 204 that's been tested. And the stock double tops at 204. You can see it twice. And instead of continuing this cup and handle and moving higher to new highs, maybe because of the market, maybe because of a pullback in the stock, who knows what is the reason, the stock loses the highs of the day and drifts down from 204 to 196. Let's call it 197. That's $7, roughly 3%, and still closes up nicely, nearly 9%. So it's at one point it's up 12% or 11%, loses some of its mojo. Now what can you do? Take a look at the chart and see. Hold on a second, I forgot to add something. Oh shit. Cannot add it right now. I want to add the view up. Okay, now I can do it. Here it is. Maybe we can get some clarity from the view up. I doubt it. Yeah. Okay, so going back to our assumption, correlation between the gap up, the intraday trend, and the volume. So assuming we have way better than average volume, and I will ignore the spreads, okay, for this purpose, and of course it's a $200 stock. There will be some spreads. I don't know if they were anywhere between 5 and 15. Most of the time, as much as I saw, there were at least 10 cents. Okay, which is not a big deal for a $200 stock. That's a mover. Okay, so where would you enter the trade? Assuming the morning session did not happen. So if I'm looking at the stock, I have to say there's only one. Keep in mind the stock trades 6.5 hours, is up 8%, but there's maybe one reversal play here at 196 with a relatively huge stop loss, almost $3. And again, percentage-wise, it's not a lot in this stock, being that it is such a big number. But 196 long, under 192. Sorry, yeah, wow, 194. Hold on a second, guys. Let me actually check it very carefully. 196. Let's round things up. 196. And 193, so it's a $3, yeah, as much as 1.5% of risk. Sorry, actually it's $2, yeah, 1.5% of risk. And again, the technical pattern is very, very tough to figure out. I mean, other than the view up entry at 196, this is why I'm pointing to this entry. Other than that, you cannot take this trade. I mean, it's going to move very fast, and you won't be able to take the trade. And even if you are able to take the trade, you will probably take it with a smaller position because the big stop loss. And I don't see, even in retrospect, a good technical pattern that can be observed other than the view up entry, which is always a good entry when you're dealing with a very strong stock, and the view up is calling for some institutional traders to buy it as a reasonable entry point, unless you want to wait for the highs of the day or maybe add any other random round number. So if I want to analyze them in retrospect, all day there is one entry, this entry. And now you look at additional entries. There is a breakout at the highs of the day with also looks very extended though, and it did not deliver much from 202 to 204. That's 1% of price action when the risk is well, I don't know if what is the risk, but probably more than 1%. And then the stock moves sideways and then it drops, and keep in mind the stock is up, a long candidate, and the result is maybe one good, if you're so lucky, one good long trade. So what's the bottom line is? The bottom line is that the price action in the morning is very important. If the price action in the morning is very aggressive, meaning you're getting a huge winning bar or a couple of bars up in the first 5 to 10 minutes, it takes the fun or the ability of investors to buy, because they already see the whatever 5, 10, 15% move, and they're going to buy only on a pullback. If there is no pullback, like in this case, until late in the day, okay, they're not going to buy it. The volumes are going to drop, they're going to move elsewhere or close the trading day and be happy with their positions in JBL. So bottom line here is that the first move in the morning is super important. Now we'll see with other stocks that a stock can close up 15%, but if the gap is 2% and it moves up 13% intraday, of course it gives you or us as day traders way better trading opportunities versus this one. Okay, so this one rockets immediately at the open, then pulls back very fast, then moves higher, and then you lose the ability to trade it, because let's face it, I don't think as much as I don't like breakouts, but if you look at this breakout, it was kind of an interesting play, and again, the market was weak yesterday. Buying the breakout over lunch or breakouts over lunch is never a great idea, but it's very tough to figure out another trade in this one. And now, if you're looking at this VWAP support level, which is another potential long play, take a look at what happens here. If you believe in the VWAP as the support and you enter above the VWAP, which is clearly a legitimate trade, take a look at this box here. Okay, so you can enter within the range of the box and place your stop loss under the VWAP. You lose money. I mean, you don't lose a lot, you lose nothing almost, but you do lose because the trend changes. It's no longer to the upside, and now the stock is moving lower basically since 12 noon until 4 p.m. So the ability to make money here is super limited in this otherwise big mover. So that's shameful, but this is how day trading works. Sometimes you can buy into a $20 stock that can move $1 or $2 intraday, and sometimes you buy into a $200 stock and it cannot do anything. And basically any attempt to buy it will result in a loss or a disappointment, or maybe a great entry will lead to the stock coming back to your entry without taking any profits. Because it's not really a scalping stock, let's face it. Not that we promote scalping, but it's also spready, and not trading it is not a fun part. Okay guys, it took way more time than I expected, so we started with JBL today. We'll do more videos today on other stocks on this list, and then we'll recap after 3 or 4 examples. Thank you. Please like and share it with your friends. It's important to us, and hopefully we'll see you all, or some of you, at our weekend seminar.